What's the fund's future prospects in relation to the global economy? The U.S. market has gone up so quickly. Does that mean it's going to go down just quickly? And if yes, how are you going to mitigate this risk? And what's your view on the global economy and the valuation of the U.S. stock market? As you all know, we don't make market predictions and we don't make economic predictions. And the reason we don't do market predictions or economic predictions is in order for these predictions to actually become profitable, you need three conditions to be met. The first condition is you need to hold a differentiated position, which is hard, or a differentiated opinion about something. The second condition that needs to be satisfied is that differentiated opinion needs to be right, which is really hard. And then the third condition that needs to be met is that you need to find a way to express that correct differentiated opinion in a very clear and directly related matter in the form of an investment. And we don't think that I don't have the skills to do all three. Can it be done? I don't know anyone who's been able to do it. But in theory, maybe an AI could do it. I don't know. I know I can't. And so again, back to what we said earlier, we're not going to go and try to do something that we don't know how to do. And instead, in terms of the drop and how quickly it happens, yes. Historically, market drops have happened at an accelerated pace relative to market gains. However, one thing to keep in mind, the early stages of the snapback from drops have also happened at a very accelerated pace. And so it's very tricky to try to decide whether you're going to try to time it to go in and out. And I think there's another question that's coming up about that. So I'll leave it until that question comes up. But I personally think it's impossible to do. Take one from the floor. No more questions from here? Should I start naming names? Okay, let's take one more. In the annual letter, turns out to be the next question. In the annual letter, you say that the market will drop by 20 to 30% soon, yet you tell investors not to sell their holdings. Can you please expand on that? I don't think I said soon. I said it will happen. I just don't know when. Over the past 100 years, the S&P has declined by more than 10%. I'm just using the S&P because the data is easy to find. The S&P has declined by more than 10%, which is what people call a correction, roughly once a year. And has had a 20% or more decline every 3.5 years, or what is known as a bear market. And those have averaged about 10% in length and took 15. The first one, the corrections have lasted 10 months, and the bear markets have lasted 15 months. But there's substantial wide variability in terms of lengths around these. And like I mentioned earlier, usually the snapback is quick. What we do know is that timing these things is extremely difficult, if not impossible. And I'd rather engage in more productive behavior, preparing for that drop instead of trying to time it. And the way we prepare for that drop is to build our wish list. The time to do research on new investment ideas is not when the stock is cheap. The time to do it is when the stock is expensive. If anything, that's the best time to do it because you're not trying to act quickly, which can also mess with your head because it's cheap and you feel like you need to do something. I'd much rather look at a company when it's expensive and get to know it and spend the time. So a lot of what we've been doing the past few months is try to find companies that we like regardless of valuation. Back to our investment process, if you remember, the last thing on the list was valuation. Valuation is extremely important, but it doesn't mean that it's where you spend the bulk of your time, and you definitely shouldn't start with it. And so what we're doing now is adding more companies to our wish list, knowing everything that we can know about them, and assigning a price where we'd be happy to buy. And that list is expanding. And even though the general market is expensive, in fact, a few names that we've been looking at, and some of the names in our existing wish list, are not too far from a price where we'd be ready to act. And as I said earlier, in spite of the cash going up, we've actually been able to deploy several percentage points into new and existing ideas just in this year. And just as what happened in 2016, where we had an almost 18% drop. People forget about that, but in early 2016, we had an 18% drop. The same thing happened in 2014 and 2011. In those cases, there were a couple of months to act. And trying to research companies at that moment in time, in the midst of things, is very hard to do. And so we are prepared. When the market drops, and I say when, we'll be ready to act decisively and act with size.